Welcome back, traders, to the best stock trading channel on YouTube. And welcome to episode 1. This is our first informational episode where we're actually going to get into information about the stock market and try to make you a better trader. The last episode was more of a pilot episode to kind of introduce the Level-Headed Traders group, our Discord chat, as well as where I plan on bringing this YouTube channel. This episode will cover what a stock is and as well as other assets that can be traded. So to start, what is a stock? Well, a stock, also known as shares or equity, is a type of security that signifies proportionate ownership in an issuing corporation. And just to let you know, I did take that. That's why I captioned it there, Investopedia. If you haven't heard, Investopedia.com is a great resource to where you can find anything and everything about knowledge of the stock market, whether it's terms, definitions, different sayings that you might not know or you might need a refresher on. Great place to go to, but I wanted to credit them with that definition. But to put it into simple terms, a stock is a portion of a company. So as I have up on the screen here, Disney, say you like Disney and you want to own a portion of Disney. Well, you would go and buy a stock for that. Stock would give you a small percentage of that company. So technically, you would own the company's assets and revenue to that certain percentage. And that percentage is based off how much stock you own. So obviously, if you owned millions and millions of dollars into Disney, you would have a significant portion of the company compared to if you just put one share of like $140 where it's trading at right now. So your proportion of the company is all going to be based on the stock shares you have and the dollar amount that represents compared to the market cap of the company. Now, stocks are sold on the New York Stock Exchange. However, not everyone can be at New York. I'm not in New York. Most people who trade in the stock market are not in New York. So then they get run through brokers. And we will go into brokers in our next lesson. That will actually be the whole lesson. I will be talking about brokers. I'll be talking about which brokers fits you best because not all brokers are the same. I want everyone to know that. Some have better commissions than others. Some have better commissions towards different trading styles than others. So whichever trading style you find that you enjoy more getting into the stock market, that will be what that video will be tailored around to kind of help better suit your needs and your styles as a trader. So that's basically what a stock is. It's simply, just to keep it simple, a portion of a company. Now let's move on. Other than stocks, even though they are the most common asset out there that most people know because it's called the stock exchange, but there are also other assets out there, such as options, which are interesting because technically you still are trading stock with options, but it's a different way of viewing the asset. It has more leverage than stocks. Forex, cryptocurrencies, ETFs, which are exchange traded funds, or bonds. Now, we will get into these other assets in deeper detail in future lessons. I will have lessons explaining each one of these assets, also what they do, and my personal favorites and my personal do's and don'ts of these different assets. In my personal opinion, I really haven't touched cryptocurrency much. I've touched Forex, I've touched ETFs. I haven't touched bonds really because I'm a trader, and I don't know if you've ever talked to a trader, but if they trade bonds, you might want to check if they're actually a trader because bonds are not something you trade and hold overnight because most of the time you can't cash out bonds within 30 days of selling it. So you can't really trade bonds. That's more for long-term investment, but options as well. I have touched options and ETFs very heavily, as well as I've dabbled in Forex and haven't touched cryptocurrency. But yeah, we will cover those all in future lessons. But as of right now, that's all you need to know. Are stocks are not the only assets out there. And as I point out there, they will be described in future lessons. So let's move on. Now, what everyone wants to know, how do you make money trading equities? Well, before we go into this, to keep it simple, it's buy low and sell high. You want to buy for a low price and you want to sell it for a higher price. Or if you're going short, you want to sell for a high price and buy for a low price. I'll describe this more. How I'm going to describe that is going into the basics of supply and demand. If anyone has taken any sort of economics in school or have learned any economics in general, you should know about a supply and demand curve as well as equilibrium. I have a chart of a supply and demand curve right here on the screen. What this basically entails is demand is always a downward sloping curve as well as supply is an upward sloping curve. I know these aren't curves. These are just lines to make it more simple to read and easier to understand. But as you can see, once demand goes down, supply tends to go up. And when you have lower demand, there's always an excess supply. Does that make sense? So if you're down here on demand, there will always be an excess supply. Low demand, excess supply. Whereas when there's a low supply, there's a high demand. There's always an inverse relationship between supply and demand in economics. Unless once we reach here, you get equilibrium. That is the perfect situation for any market economy to be at. It's when the supply exactly meets the demand. So 10 people want an iPhone. Well, 10 people are supplying iPhones, to keep it simple. Think about a market, people trading stocks. 10 people want shares of Disney. 10 people are selling shares of Disney. That's equilibrium. Whereas when it's not in equilibrium, 10 people are selling shares of Disney, whereas only 5 people want to buy them. That's not equilibrium. That is excess supply over excess demand. So how you make money in stocks is hopefully when you buy in, it's low supply, and then you want people having more demand for it. You want people to want your stock more and more the longer you hold it. Therefore, they will pay a higher premium or a higher price. Now, what I said earlier, there's a difference between long and short positions. You might hear these when you're trading stock. I mean, it's not going to be a might. You're going to hear these when you trade stocks. Long is when you want a stock price to rise. You simply want to buy it at a low price, so let's say $10, and you want it to rise to, let's say, 20. You made money on a long position. Whereas short is a little bit more complicated. Short is when you make money when the stock goes down. So if the stock goes up on you and you're in a short position, you're actually losing money. Not many people know you can make money both ways of the stock market, but you can. When you short, that means you sell a stock at a high. So let's say you sell up here, okay? Actually, let me go back to the Disney example here. So let's say you sell Disney right here at this peak. Let's just say, to make it easy, it's $100. You sell Disney at $100. And then you buy back right down here, and let's call it 85. So you sell at 100 and you buy at 85. Well, that's a $15 difference. So that means you just made $15 on the stock because you sold it for 100, but you bought it back for 85. So you have a $15 difference to where you already made $100 profit up here, but you had to buy it back for $85. So you get to keep the difference. That's short selling. And then long, like we said before, is say you buy it down here at 85 and you sell it at 100. That's a $15 difference. That's easy. Most people can understand long positions. Short positions are a little bit more complicated because you're selling and then buying back the shares at a lower price, and you keep the difference. Okay, so let's move on from there. Also, to keep in mind when you're judging basically your revenue or how much money you make from the stock market is you want to keep in mind commission. Like I said earlier, we will go deeper into brokers and different commissions that they charge, or even if they do charge commissions. I mean, there are free brokers out there. Like many people who are getting started may know Robinhood or Webull. Traders like that, not traders, but commissions like that are generally with lackluster executions. You might not get the best fill. So that's kind of what you pay off if you're getting no commission. You're going to get bad fills in the stock market. So it's a give or take, and we'll go deeper into commissions in the next video, but just keep in mind commissions will eat into your profits if you end up going sideways. Also, a big thing to keep in mind, big thing, are your taxes. Not many people know this, but say you make $100 profit from a stock, that $100 is not taxed. That is tax-free at that point. But I'm not saying you get your stock money untaxed, okay? It's not taxed at that point, but at the end of the year, at the end of the tax year, you will have to pay taxes on this. Anywhere from 0, 15 to 20%, depending on your income range. So, just an easy reminder, just keep 20% of your stock market profits to the side. Don't touch them. That's what you're going to have to pay Uncle Sam at the end of the year. It's not fun, but it's just how it works when you get untaxed, basically, income at that moment. because stocks are generally defined, not generally, but they're defined as capital gains. So what capital gains are they're the profits from a sale of an asset, so such as a stock or a business or land. So any capital gains that you sell, you will have to pay 0, 15 to 20% on, depending on your tax bracket income range. So that's about it, guys. I really hope you enjoyed this video. I tried to keep it short, sweet, to the point. All these videos, these lessons that I'm going to give out, I'm going to try and make them as easy to follow for beginners. Also, maybe advanced people might learn something new. But I'm trying to make it very user-friendly as well as easy to visualize, easy to understand, easy to conceptualize, and then put into your own words. So I really hope I earned your thumbs up in this video. And on Wednesday, we will be going into brokers, like I said, and how to find the one that suits you and your specific trading style, whether it's options, whether it's stocks, long-term options, short-term options, day trader, swing trader, whatever you prefer to do. We will go into that in depth in the next video. So I hope you have a great rest of your day, and I'll talk to you soon.